Okay, welcome everybody to another episode of Arthur's Roundtable. We're super happy to have Nick Edwards back today. Full disclosure, at the beginning of this, we're on the cap table, so we have skin in the game, and so our comments aren't constructed in that we're totally promoting this, but we're totally promoting it. So uh, we're super excited about what Nick has built and has done. And we're going to talk a little bit about Nick's background and then talk about what happened to get us to this point and then what it looks like going forward with the team. And that should probably be more than enough for everybody. So, with that, Nick, thanks again for being here. Super enjoyed our companionship and colleague business relationship and super excited about what you're doing. Of course, there's a lot of interest in sports and sports adjacent type businesses, and so I think you've been able to leverage that. And let's hear a little bit about you, and then get into that.
Sure, appreciate it. Thanks again for having me. It's always great to have a conversation with you. So, quick background on myself, just for those that don't know me. My name's Nick Edwards. I'm actually a physiologist by trade, kind of converted into the entrepreneur ecosystem and fund manager side of the equation. I actually was a former athlete, tore my ACL playing college football. After that, went into MMA for quite a few years. Had a very good career on that side, but all if you're in this sport, you know really quickly that you can't just punch people and get hit in the face for the rest of your career. So you have to transition out somewhere along the line. And so for me, I actually did that rather smoothly and did that early on going into physiology because I was fascinated with kind of that combination of where sports meets medicine and then how to really improve, how people are performing and what they can do. And so when I was in that position, I worked with NFL, NHL teams. I was blessed to have doors open for me and absolutely own that there's been some phenomenal people surrounding me. And when I did that, I saw all the cool tech, the things that are out there, and knew that there has to be different ways to scale this. So I went into the founder seat, openly wear the badge that I've had a successful exit as well as I've had to BK companies. So I guess with pride say that I've been battle tested and I know the good things and the bad things that can happen in business, riding both sides of the wave. And I also lovingly say that both sides suck because exiting a company is absolutely brutal, and BKing a company is absolutely brutal too. Anybody who's went through it knows that it's a grind on either side. And
If it
kind of
was easy, everybody would do it. I know that's a an overused axiom, but it's true. Yeah.
it's true. It takes you have to have a specific amount of screws loose and specific ones to be able to have that drive and continue on and be obsessed with the project so that you know you can take it to its exit and do it the right way.
Yeah, and look, you're still young, and I mean that in the most affectionate way. And so people need to know that I so there's some people that sort of just meander along, and you've been working really hard, and it's evidence in what you've done. So
Thank you. Appreciate
yeah,
that. To that end, I've always kind of had a single track. And although people usually question, they're like, how'd you go from athletics into being a fund manager? And it actually is a pretty smooth evolution because everything I've done has either been in sports, medicine, or hospitality real estate. And so all three of those have intersection points, whether that's a medical facility that works in sports performance. It's a stadium project. It's, working on fan experience. It all kind of comes around to the same epicenter. And so for me, after being on the physiology side, I actually started running different SPVs, worked with orthopedic groups, did 14 different brick and mortar facilities, biggest 130,000 square feet, stadium adjacent projects, working directly with teams all the way through sports tech founders. And then I was a LP in funds, angel investor, to ultimately being a general partner. Worked on both the startup studio, intellectual property and transfer departments, so IT transfer and others, all the way through being a fund manager of where I'm at CVP now.
can we talk? We're going to talk about the team, but let's just talk about our nexus of connectivity with Ed. Tell us about Ed a little bit, because that's
Yeah,
why we know each other.
that's a mutual colleague. So when we're assembling this, we pride ourselves on really being the experts in the room. And not just the experts in the room, but really damn good operators when it comes to the business of sport. So, sports as an asset class is very interesting because unless you know the actual business of sport, you're going to fail because you have to know where to invest, when to invest, revenue quality, and how it intersects with that. And so, we recruited what I believe is the best of the best team to have it. So we have folks that help us on compliance. We brought in people that help us on diligence. But for our connection is by a gentleman named Ed Crump. So when we started looking at sports tech and working on things together, we brought in Ed. So Ed is our CTO. He is the founder of Amazon Alexa. So he is beyond brilliant on the technology side of it. Prior to that, he worked with Reed Hastings, did things for Netflix and kind of the digitization, and then going into the internet side of Netflix. Everybody knows from the CDs in the mail to then actually going digital. That's Ed. And then he was also the global head of innovation for Nike. So
Nike, yeah. I mean, that
yeah,
was his latest sort of corporate gig, right?
it is. And he
Yeah,
left all that to join us, which
yeah,
is kind of a nice feather in our cap of we're attracting really good talent.
yeah. Yeah, he's a good guy too.
Yeah, I think that's the great thing about Ed is beyond that he's brilliant, he is a very direct, open, and kind human being. So he will tell you nicely that you have an ugly baby, or he'll tell you very nicely that this thing has legs.
That's right. No, it was wild the first time. It's only interesting because we know him. I don't know if you met him, but when I met him, he had hair down below his shoulders. Now he's bald as a cue ball, right?
You know, that's what I make fun of him with is that, he goes on a trip with Bezos since he obviously, worked with through Amazon and he comes back completely bald. I'm like, oh my gosh, there's got to be something in the water with you
Yeah,
guys.
yeah,
So yeah, it's really funny because he's still even on Zoom meetings has his picture where he looks like a parrot head. He has
right.
super long hair, long beard, long mustache, and now he's completely clean shaven,
Yeah,
even his
right.
eyes. So he's catfishing when he's on Zoom calls.
Yeah, yeah. Dude, Jimmy Buffett. Yeah,
Oh
been
yeah.
plenty of those. Let's talk a little bit more about the rest of the team.
Yeah. So across our team, like I said, we've really built in and brought in the best experts across the board. So as voting partners, you have myself, a gentleman named Jeff McDermott, who's done an absolute ton in the real estate side of the spectrum from STRs all the way through hospitality. And then we also have another gentleman named Marcus Colston. Marcus and I are really the co-founders of this fund. Marcus is a former NFL player, played for the Saints for 10 plus years, won a Super Bowl with them, phenomenal human being. He actually has a very interesting mirror story to what I have because he, during his playing years, knew that he couldn't play, be in sport forever. And so he continued on to look at more the investment route, the financial advisory route. And so he got his Series 66, Series 7, and continued. And so for him, he actually transitioned out of sport, looking at how to become a financial advisor, help with athletes on the financial education, financial literacy, and that gatewayed the door to investing. And so through his path and my path, they really converged to make CVP. And so the three of us are the voting partners. Underneath us, you have another gentleman named by the by the name of Kyle Offray. Kyle also spent time in the league. He played for 4 years, bounced around a couple different teams. After that, he went into the venture side of the spectrum, running a just shy of $100 million fund for Comcast, NBC Universal. So he basically did all of the diligence and startup work for a Fortune 50 company, looking at how they scale and then how do they take these companies and implant them into the behemoth that is, Comcast, NBC. So how do we take those and actually apply them? So his expertise really is on the once we invest, how do we get this thing to work? How do we get it so that we can amplify the scale? So Kyle runs our entire value add management team. So in that value add management team, and that term gets used and abused across VC and
Yeah,
PE like you wouldn't believe.
totally. Yeah,
Yeah. But for us, we really deploy it to make it different because, again, knowing the business of sport, we have massive connectors in sport. So underneath Kyle, Ed is right there, kind of like we talked about. Another gentleman by the name of Jamil Northcutt. Jamil has worked across the league. He was the front office of MLS and then many teams in the NFL and then also down to the collegiate level. So he knows the business of sport in and out, following the dollars from soup to nuts of where it goes from the fan experience through the team and then back out the door.
yeah,
He helps us on the financial education as well as kind of the scale and propensity of the market. There's another person by the name of Alexa Diagostino. She does all of our marketing. She owns the third largest private marketing firm in the country and the number one ad spend firm in the country. And she specializes in sports applications. So she does all that for us so then we can, again, help these companies scale and know where things go.
yeah,
Adjacent to that, then we have a team by the name of Anthropy Partners, led by a gentleman named Bill Powell. Bill is a seasoned investor who really works on applying the right investments to improve the human condition. So everything from looking at aura rings and other things like that. He has been kind of the lead investor and has had access to a lot of the key investments that have went from seed to IPO, and he's participated up and down the scale at that.
Is he
His
also involved in the longevity? Because that's a big buzzword now, aside from, wanting to live longer, healthier. Is he involved in that?
Absolutely. Yep. And so we vet all the companies together. We have a very rigorous diligence process that we go through with individuals. And then he actually is our CIO that runs all of our 40 Act fund side of the fence. So when we look at the public dollars coming into this firm, he's overseeing all of those with his team at Anthropy. And so that's made up of a gentleman who runs the incubator lab at NASA, to another gentleman who used to do things at Stadia Ventures, to another gentleman who also worked at Amazon and ran the entire sports division worldwide for Amazon. So it's a massive team that is all highly skilled to do the right thing across the ecosystem, both on our GP stake side of the vehicle and our 40 Act fund side of the vehicle.
Okay, so if are there more that you'd like to highlight before we move on?
Last but not least, because everybody asks, they're like, well, you have so many experts in this. How do you really make sure that you're doing the right thing as fiduciaries? And
Yeah.
so we have a group called Sweater, led by a gentleman named Jesse Randall, who does all of our compliance pieces. And so with that, anybody who knows a 40 Act fund and an interval fund, it's a highly scrutinized process and highly regulated, which is great. We want that level of oversight. We want that level of see-through so that people can feel like this is huge, because we truly are building the largest retail investor friendly sports firm in the country. And so we've tagged in Jesse and his team to do just that.
Yeah, and I've had a conversation with them. Super smart. Uh, so let's move on to structure, right? So there was a C corp or corporate structure, and then it's moved into something else, and then there's two different ways to get into the game, retail wise and LP wise. So just lay that out for everybody because it's a little
Yeah.
complex, right?
It's a little complex, but I guess if you take it you can kind of do two analogies. You can either say it's like a sports version of Berkshire Hathaway, or you can say it's a simple GP structure with a different vehicle on the LP side. And so, really, what we've created is an evergreen firm. And so, that's the nice thing about this, because I'll even back up and say that in sports in general has been a traditionally illiquid asset class. This is something where people, and when they think of something, they just think of teams and leagues, right?
Teams, yeah.
Yeah, they're like, hey, how much of the Dodgers do you own? It's like, well, no, that's not the game here, right?
Yeah.
So, although the teams are great and it's kind of nice to say, hey, we got this vanity item, the reality is they're a placeholder in the sports value chain.
Yeah.
If you really want to follow the dollars, what makes the money is the ticketing, the food and bev, the ancillary services, the media and broadcasting, things that are adjacent to the team. So when we invest, we create a smart portfolio, meaning what we do is almost like a little mini smart city surrounding an asset. So right now, and we can talk about this a little later, we're looking at an Italian soccer club. Not only are we looking at the club, but we're looking at the stadium, the real estate, the short-term rentals around that. We're looking at the sports performance, so high performance pieces, deploying sports tech, ticketing, digital wallet. We're really looking from start to finish, where are the dollars going? And there's what's nice is this has actually been done in the US a couple times. Our team has actually done this multiple times in Italy, just in soccer clubs alone. So we've been part of turnaround projects, but if you want to look and point to an easy one, look at the Battery in Atlanta. The Braves group owns not only the Braves, but they own the parking, they own the real estate. So right now, even though it's not
Yeah.
baseball season, there's tons of people there for food and bev at the restaurants. There's tons of people there at the co-working space. It's like 1 square mile of revenue producing assets
Yeah.
that you can follow the digital footprint and know the propensity of the market and then invest where the dollar should go.
It's being a New Yorker, it's always been amusing how the Jets get such shit all the time. And what people don't realize is Woody Johnson doesn't really care because he's making money along the way. And I mean, he cares, but not that much. I'm not speaking for him, so I don't want to get chastised for that. But, the franchise throws off so much money. He's going, all right, we'd like to win, but it's okay if we don't, right?
It's exactly right. It's not
Yeah.
necessarily the franchise. The valuations continue to increase, but you need an exit to have those happen. So otherwise, in sports and knowing the business sport, you have to have liquidity in the assets. And so that's why we formed this vehicle the way that we did. And we wanted to make it so that everyday folks who are paying into sport, like you got a mom who's, driving her kids to baseball, buying them a $500 baseball bat, they're paying $3,500 for goalie pads, for just these mites, right? I mean, it's ludicrous, but
Yeah.
that's how this works. And so they're paying into sport. Imagine instead of sitting there at, a game and at halftime you're at DraftKings, you're actually investing, right? So we want to make this so that's open to retail investors, everyday folks, so they can invest alongside the biggest names in sports. And so our structure to do that is to basically have a vertically integrated holdco with an evergreen fund. So right now, like you said, Arthur, there's kind of two ways to invest. So there's the accredited investor and non-accredited investor. The accredited investors come into our holdco. That holdco, there's no interest in carry. Everybody always asks naturally then, well, how do you make money? We own stock in this too, so we're part of that. So
Berkshire
that's what
Hathaway. Yeah.
exactly. We
Yeah.
make money when our investors make money.
Yeah.
So you can invest in the holdco entity that owns all of the assets, including the IRA. I'm sorry, the RIA that bills. I'm sorry, that reaps the management fees from the evergreen fund itself, which is retail investor side. So not only do we own all the assets that appreciate, and each one of those carries their own valuation, we also own the RIA that carries its own valuation, and then we reap fees to perpetuity. So then if you are a retail investor, non-accredited investor, you can come in to that 40 Act fund, that evergreen fund. That grows to a billion, 5 billion assets under management beyond. There's no cap. It goes on forever. They can plan that for $500. So that's what's really cool is the mom and pops can invest alongside the accredited investor, two different vehicles, but gets us to the same point. And so
I think a lot of people might be helpful, even though there's a lot of smart people that'll be listening to this. Uh, the interval fund is basically a mutual fund, 40 Act fund that everybody knows about, where anybody can invest, and that the regulators said you can have a 40 Act fund that has an NAV and has limited liquidity based on the call of the fund manager. And so you go into it as a retail investor, basically realizing that it's not going to be Vanguard, where it's a money market account, that you're going to invest for the long term, and that there will be some liquidity available, but you essentially get to invest like a GP or an LP in an accredited investor fund. So uh, the consequence of investing in an interval fund is that you don't have all the liquidity that you would otherwise have, but you also have the opportunity, the upside. Did I get that right?
that's exactly right. And that's kind of the cool thing about this, because when we wanted to take something that's traditionally an illiquid asset class, we had to provide liquidity for it. And so we knew that we had to build in different mechanisms, which is why the GP entity mirrors the 40 Act fund the exact same way. So it all gets, and this is again where Sweater and Jesse Randall and that team helps us. So people naturally ask, like, well, if this isn't a 2 and 20 fund, you're not making money on your interest and carry. Like, when does the fund exit? And the answer is there isn't one.
Evergreen, yeah.
Literally, it's a stock appreciation play. It's a mutual
Yeah.
fund, as you said.
Yeah.
So let's say the NAV today is $1 per share, and let's say it grows to $4 per share. And let's round numbers. There's you have $1 million in, it goes to 4 million. You're like, hey, I want to sell off 3 million, so I'm playing with house money and then keep a million in there. You can do that.
Yeah.
And the way that it works is that there's secondaries trading on demand. So we have a platform that you can trade peer to peer on demand anytime. And because it's secondaries, it can dip back and forth between accredited and non-accredited investors.
Right.
So there's always a buyer on the other side. And then there's semi-annual redemption periods where then you're selling back to the company itself.
Yeah.
And here's the hidden thing that people don't realize. That also increases the NAV for the holdco.
Exactly.
Right?
Yeah.
So then what we do is that those liquidity periods, you hit this right on, it's 5% aggregate cap of the entire fund. So at a $5 billion fund, once it gets there, that 5% is rather large. So people can actually change their entire position anytime. And last thing that I'll say is, even outside of a redemption period, the holdco actually keeps a ROFR on the secondaries transactions. So let's say it's outside a redemption period, but someone's like, hey, out of 4 million, I want to sell 3 million today. I can do that. Post it on there, and then we can still redeem that during non-redemption periods. It's not just the official open period.
It's kind of like stock buyback.
It is. That's
Yeah.
exactly this. Back to Berkshire again, right?
Yeah.
Exact
Yeah.
same.
Yeah. So, you know, the private equity hedge fund, more private equity, the challenge has been for retail investors that they can't stand not being liquid, right? So this solves
Right.
part of the problem, and they can basically invest like the 1% of the 1% invest, and the fees associated with aren't 2 and 20, they're substantially less, and it's just a percentage of the assets under management, right? So
Right. Yep. So
everybody's
that's the beauty
accustomed to
about
that.
it.
Yeah.
Right. So, I mean, this can be stock appreciation. If somebody really wants to hold for 5, 10 years, they can. If they want to do a slow drip, they can. If they want to make it so that they're trading peer to peer and liquidate all of it, they can. So, it's kind of the ultimate flexibility for this type of an asset class.
So I know that the GP's LP structures in place. Is the interval fund uh, available now for retail investors?
So it's officially launched. We're actually going to be able to take in funds looking at April 1st. Knock on wood that we get, we've heard back from the SEC and we've gotten everything blessed to date, which is fantastic.
Yeah.
Now, the next step, full disclosure, is we actually bring in trustees. So, trustees actually, what they do is they basically provide the oversight of all of the retail investors' money. So they're the fiduciaries that work as a third party independently alongside us to make sure we're investing correctly, doing it the right way. So once they're in place, we get stamp approval and the sucker's live.
Yeah. Just like every other mutual fund. Yeah.
Exactly.
Yeah.
Exactly.
They need a board of trustees.
Yep.
So let's talk about the opportunity for the accredited investor in the holdco.
Yes. So the opportunity right now is we're actually going to be raising across this vehicle, and this is going to be the last time that we raise the holdco. So after this, it's just going to be in the actual 40 Act to perpetuity. So this is kind of the, I guess, we're hoping to wrap this up this year. This is going to be the last opportunity to get in. Right now, it is capped at $1 per share. So those that are coming in are getting in at $1 per share, and then gonna go forward. It could escalate with obviously the rest of the firm. So those that are interested, this is the point. And right now, we're going after some very large assets that are going to be dropped into the fund.
So right now, I happen to know this, and so I can say it without you saying it, without violating any regulatory stuff. But the value is more than $1 per share right now.
Yes, that's
So you're
correct.
basically getting an embedded bump investing at $1 per share. So can you talk a little bit about the businesses that you have invested in so far?
Yeah, so we've just started. We have a few under LOI and we're pulling the triggers. So I'll do broad strokes. And the reason why I'll do broad strokes is
Yeah, don't
because
say anything you don't want anybody to know. Yeah.
of course. Well,
Yeah.
and what's interesting is that, doing a 40 act fund, it's actually a blind pool. And the reason why we do it that way is because with an RAA structure, if we didn't, we'd literally have to get blessing from every single person. So you can imagine how much of a nightmare that would
Yeah.
be.
Yeah.
So what we have right now, we actually have a in stadium service provider, and so what's interesting about this is it's in stadium plumbing, and so nobody thinks about that, right? And so everyone's like,
Except
ah,
that when they're a third beer and they can't get to the bathroom, right? Yeah. Right.
exactly,
Yeah.
exactly. But this firm prints money. I mean, we're talking over 60 points of margin. And
Right.
so we've acquired that one. We're actually right now doing a in-seat food and bev company. We're doing a customer product that is a sports beverage that we're doing right now. And then the reason why I can openly disclose this one, and we have actually quite a few others under LOI right now, but the one I can disclose because we're doing it as we have an SPV that we're partnered with another group on. And so because of the SPV, right, it's a different vehicle. So I
Yeah.
don't have to go with blind pool rules.
Right.
So this
Right.
one is a Serie A soccer team in Cagliari, Italy. So Cagliari is a very well-known place in Sardinia. This specific team is an off-market transaction, which is very rare in Italian soccer. This one is a private transaction between our partner group called Praxis. The gentleman who leads that, his name is Maurizio. Maurizio is close with the owner, and they reached out to us because of what we're able to deliver, and because we have done this playbook before. They said, "Hey, come in and join us with this." And so we've stepped up. We're going to basically be leading this with them. So we're going to be riding right alongside with them, purchasing this entity, as well as the stadium and everything around it, like I kind of mentioned earlier. So Cagliari is an interesting deal where we're buying not only the team, but the women's, the youth, the stadium, and the local municipality has also chipped in 60 million to a new stadium project, which also gives us 50 years of full economic rights, concerts, anything inside the stadium
Wow.
that we can generate in there. So this is a sweetheart of a transaction that you don't see often, and it's frankly just because it's a closed door and we have access to it.
Yeah.
And I think that's, again, not to a shameless plug here, is that's kind of the feather in our cap, is because we know the sports ecosystem, people are reaching out to us. We have an insane amount of deal flow, and because we truly believe we're at the top 1% of the class where people want to scale with us.
Yeah. And the opportunity for this particular is a function of somebody aging out.
Yeah, so he basically what's interesting is the owner has provided all the capital for this to date. Even the debt on the team is owned by him. So the beautiful thing
Smart.
about this is it's all in-house, but he really wants to make sure that this is capitalized the right way. It's chronically undercapitalized, as is kind of that area in Sardinia by itself.
Yeah.
And so because of that, there's an opportunity to bring new, fresh dollars in there and still have the current owner. He's going to stay in as a minority shareholder because of the cultural differences, right? And making sure that it's not just the American team is coming in here and just stormtroopering this thing and taking it over. It's literally a friendly transaction where we can kind of keep on board and make sure that culturally we're doing the right things as well as economically.
And this is different in that, like, what was that Netflix show, Wexford?
Yeah, Wrexham, yes.
Wrexham? In
Yes,
that the team actually has some legs, right?
it does. Yep. So, what's interesting about this team is it's middle of the pack. And so, because of that, we do look at relegation and other pieces that may be risks. But because of how the debt is stacked, and because Sardinia being an island and looking at this, the majority of the sales are not necessarily the media and broadcasting rights, which you see with a lot of other teams that are more to the core of Italy. So they've been relegated before. We've kind of have some downside protections in place, and we're going to be doing this as a multiple tranche schedule so that we can get the right valuation on the unit.
Yeah. Wild.
Yeah, this is one I'm very excited about because the nice thing is not only are we going to be able to go in there with our playbook that we've done before, but we can be part of all the economics of it. We're able to drop in all of our portfolio companies. We're able to then have an influence on things that are there. We're able to take a board seat and make sure that we're working alongside Praxis and the owner to do the right thing by the team and make sure that this can scale. And so we've seen this playbook before and have done it successfully. So I don't see why we can't replicate it again.
Yeah, it's a beautiful part of the world too.
Oh, it is.
Yeah.
So the actual stadium, the way that it looks right now is there's actually a hotel on the side of it where half of the units look onto the pitch, the other half look onto the ocean.
Is that so cool?
It's gorgeous.
Wow. Super interesting. So what else do we want to cover?
Ooh, good question.
Yeah.
I think we covered the team well, which is great because I think that they're really our shining stars of the reason why we're a big differentiator. We covered the liquidity periods, which is really how our investors make money and why this is a vehicle to invest in. And then we featured a really good unit. I think the only other thing that I'll talk about with this particular asset in this unit is not only are we wanting people to come into CVP so they can share in all the assets that we're going to be deploying and purchasing alongside this,
Yeah.
but let's say somebody that's listening does have affinity for, doing hotels. Maybe their core business is not only investing, but they also want to do stadiums. Maybe they also want to do short-term rentals or other things alongside it. Maybe medical offices, right? All of this is on the table for this deal. So it's one of those where come invest in CVP. And then what we're going to do is we're going to take our LPs, the people who are close, it's weird to say this in a nice way, we are in a good way, incestuous in business, where
Yeah.
we're going to make sure that those who have came to the table with us, we're going to tag them on the shoulder and say, hey, you're going to get pro rata rights to invest alongside us in the stadium and the rental projects. So they can go directly alongside us and then get deeper in with some of the things that are their core business.
Yeah. I don't think there's anything wrong with saying that. You know,
No,
it's people who brought you to the dance. You help them along and take their capital as opposed to somebody else that has no, that's just capital. What good is it, right? Yeah.
no, and we're a very all boats float on a rising tide. And I mean, if you can't tell this by my voice and how I interact, I'm very much a relationship driven person. So,
I think
it's
we
one of
can,
those like,
I think
how
we
can
can
we
tell
like,
that.
it's how do we get the right people in the room and really
Yeah.
make some shit happen?
Yeah. Yeah. Like, to the group, just again, full disclosure, we're on the cap table, super excited to be there and bringing a bunch of folks to the table as well. And so it's something that resonates with you or others that you know. It's just let me know. We'll make sure you get the right conversation going. Yeah. So this has been again super helpful. Uh,
Thank you.
I think it'd be smart for us to do this on a regular basis because things are moving pretty fast. Yeah.
Yeah, it's been wild how fast this has worked and how well that the market has, clung on to what we're doing because it's new and whenever you do something new, you never know how the market's going to react. But I would say that everything that we have done has either a track record or has been done in the past. So it's just that 1% different than
Yeah.
everybody else, where then everyone's like, that's it. That's the
Yeah.
vehicle.
Yeah.
No interest in carry. I like it. Liquidity. I like it. Let's
Yeah.
go.
And then let's face it, everybody is uh, uh, not everybody. People in the know have aspired to be Berkshire Hathaway because it just kept on growing and growing and growing. And even though there are people that made a lot of money on exits, and that's one way to get a capital base, uh, but if you don't ever have to sell anything, then you don't ever have to pay taxes. Although
Yep.
I just saw a note the other day that Berkshire Hathaway is the largest taxpayer in the country. It was like $48 billion in taxes they
I
paid.
saw that. I saw that.
Yeah.
You know what? I'd like to, I didn't dive in deeper, but I'd like to know how much of that is from their operating business of insurance versus actually their holdings. I think that'd be really cool to
It
look
would
at.
be interesting. And one of the brilliant things that he did is I owned a reinsurance company at one time in my
Yep.
life. And the balance sheet of an insurance company is super useful
Oh,
because
yes.
unlike a balance sheet in a bank, you only have to post assets that'll cover losses that you can actuarially point to, right? And so the float is hugely valuable. And so I think that's part of why they bought Geico and Geico's the driver, right? If they need more capital, they just lower the rates. If they don't want any more capital, they increase the rates, right? It's just,
Right.
it's a mechanism that they can turn on and off.
Yep. So think of it this way too. So look at the fact that we have all of the shares that do the distributions in the interval fund. And so
Right.
everything comes back up to the holdco. We reinvest those in the Class B shares.
Yeah.
We have redemption periods. We reinvest in the Class B shares or we don't.
Yeah.
Literally the exact same type of flow.
Yeah. Yeah. It's a good place to be.
Yep.
Well, Nick, thanks again for doing this. Super happy to be involved. Really excited about what you're doing. We'll make sure the group gets all this promptly and then gets in touch directly if there's anything to talk about for sure. Yeah,
Great. Thanks, Arthur. I love doing this. Really appreciate it.
me too. Thanks, man. Okay,
Thanks.
take care.